With Bitcoin soaring this year near all-time highs and after a historic ETF launch, Goldman Sachs CIO still ain't having it. She makes some bold statements about Bitcoin. We'll take a look at what she gets right and what she gets wrong with her Bitcoin skepticism. Plus, is Ethereum going to zero? We talk about the pitfalls of proof of stake and why the second largest crypto token continues to fall in price relative to Bitcoin, as the Ethereum Foundation proposes another protocol change. And Uncle Rome, or Fed Chair Jerome Powell, gives another update at Stanford University and reiterates that this time it's actually different. Instead of listening to his words, we're going to look at the actions that are going on behind the scenes. And let's just say these actions are bullish for Bitcoin. Welcome to the Bitcoin Daily Show. I'm Dante Cook, head of Swan Business. It's a new day, and we have another bad take on Bitcoin. This time, it's from Goldman Sachs CIO, Mosavar Rahmani. First, she doesn't think the $1.3 trillion asset is an investment class at all, and she compared it to the Tulip Mania of the 1600s. Here's the problem with that. If you actually dig into the Tulip Mania of the 1600s, you'll come to realize that that's a pretty bad analogy. First, tulips tend to only last for 7 years, and that's in the best of conditions. Most typically, they die within a few weeks. And if you're talking about the Dutch tulip mania as a market phenomenon, it only lasted 3 years, from 1634 to 1637. Does she not realize that Bitcoin has been around for over 15 years? Does she also not realize that the US dollar is probably the largest tulip mania that the world has ever seen? Does she even know what happened in 1971?
Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connolly to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
Maybe she needs to speak with fellow New Yorker, Steve Cohen, who's one of the latest billionaires and sports owners to admit that he owns Bitcoin publicly. His son is the one that got him into it. And like most good future investment bets, do you really want to listen to people who are 60, 70, 80 years old about future innovations in technology? Or do you want to follow the trends of people like their sons? Although she's 100% wrong on Bitcoin, she's not completely wrong when she talks about cryptocurrencies. She says, crypto bulls all proclaim democratization of finance, yet the main decisions end up being driven by just a few controlling people. This is true. Most crypto tokens and Web3 decentralized protocols are not actually decentralized at all. They're not protocols, they're hyped up tokens that are being monetized as unregistered securities at the moment. The Ethereum community is up in arms again about Ethereum research developers proposing another protocol change. They want to change the issuance rates and de-incentivize staking because more staking will make Ethereum more expensive, more centralized, less secure, and more staking will actually drive the yield that everyone's looking for and has been promised to zero. As one major Web3 founder says, these tweaks try to mask an unsolvable problem that lies within proof of stake. Bitcoiners have been talking about the challenges of proof of stake for years now, which is why Rahmani is wrong in the article again, saying that Bitcoin is not valuable because it doesn't produce cash flows or yield or dividends. It's this reason precisely that Bitcoin is valuable, and it is the only value cryptocurrency out there. In her last and final attempt to sound smart, and in the process make herself look like a complete fool, she says, at least you can hold on to physical gold, and you can store it, something that you can't do with crypto. It's not actually true. At Swan, over 83% of all the Bitcoin purchased on our platform is withdrawn to self-custody. Bitcoin is absolutely something that you can store. If you can remember, store, or protect 12 or 24 words, you can actually hold Bitcoin. Speaking of proof of stake, the Kansas City Cattle Company became yet another corporation to add Bitcoin as a treasury reserve asset. I hope you saw what I did there. I'm a dad, but I think that was kind of funny. Back to the crypto story for one bit. Major VC and crypto firms like Andreessen Horowitz will try to buy their way into getting crypto regulated differently. And why would they do that? Because they've invested billions of dollars into these propped up Web3 and crypto projects. And they're hoping to convince DC regulators through lobbyists that crypto is an essential innovation for the future of the US economy as we know it. And without regulating crypto differently, we're somehow going to lose our position as a world superpower. I'm not buying it.
We've massively committed the flag and the firm to being involved in politics. So you've been spending a tremendous amount of time in Washington. I've been spending time in Washington. Many of our other partners like Chris Dixon, BJ Pandey have been spending time in Washington. We have real actual kind of a lobbying capability within the firm, when we'll talk about that some more, but call it government affairs, but they're registered lobbyists and they're working to kind of work with the government and set up the right meetings and help us get our message across. And then we're deploying a really significant amount of money to basically pushing innovation forward, getting to the right regulation on tech that preserves America's strength. And we are not only committed to doing that this year, but for the next decade.
Don't believe everything that you hear in the crypto world. With Bitcoin, we always say, don't trust, verify. The crypto industry is full of lies. A friend shared another sad story. An older gentleman clicked a Google ad and was taken to Coinbase where $400,000 of his Bitcoin and his Coinbase account were drained. That's why Bobby's message at the bottom of this note still rings true. Not your keys, not your coin. Don't leave your Bitcoin on exchanges, specifically exchanges like Coinbase. Even if they did announce a major partnership with Lightspark and are actually coming back to their Bitcoin roots, all of the things that you see in crypto land are not as they are. It's why we emphasize this so much on the show. Remove your Bitcoin from exchanges. If you have questions about taking self-custody and you need help doing it, please send me an email to daily@swanbitcoin.com and I'm happy to help you on your journey to sovereignty. In other news, Fed Chair Jerome Powell gave a presentation earlier this morning at Stanford University. And I have to admit, this guy must be a hell of a poker player because he can keep a straight face and say that we have a strong economy, inflation's under control, we're going to keep rates higher for longer, things aren't as they seem. Actually, he does really say things are actually different this time.
I think I'll start with where we think the inflation came from. So what is actually different this time, at the risk of making that statement?
In true Bitcoin fashion of don't trust, verify, I'm not looking at the things that he's saying. I'm looking at the things that are happening underneath in the underlying data and trying to make assumptions for my own self. One of the major stories that isn't being talked about is the ISDA letter for reform of the SLR, or the supplementary leverage ratio. What does this actually mean? Well, Luke Groman explains this well in his interview with Sam Callahan on our recent Swan Signal Live.
I think one of the signposts is the proposal to change the SLR rules. And it reminded me of a paper that I read last year from Charles Calamiris, I think it pronounced it, from the Fed, about fiscal dominance and how they'll have to, change the policies with respect to the reserve requirements if fiscal dominance becomes a reality. But I think, we're in that reality right now. And so why are they talking about that? Because this is what I mean by valves that can turn to kind of keep the system more afloat than people might think. Why does changing the SLR requirements, change things in terms of their ability to continue this system to keep it going?
Yeah, the SLR requirement is just a supplementary leverage ratio requirement under the Basel III rules. It's basically bank rules. Suspending those rules as it relates to treasuries specifically is something they did, the Fed did from April of 20 through May of 2021. All that does is effectively means banks can buy treasuries with 0% down, no capital requirements. It's QE. It's QE done through the banks.
This effectively allows the Fed to implement QE without pulling a monetary lever, as U.S. banks will be able to buy unlimited amounts of treasury, which will pump liquidity into the economy. This tactic was only used in a moment of emergency and crisis during COVID and the pandemic between March of 2020 and April of 2020, when liquidity dried up in the banking system overall. If this does happen, this is incredibly bullish for Bitcoin. This is on top of record institutional interest, as firms like Morgan Stanley and UBS hope to become the first wirehouses to be able to offer the spot Bitcoin ETFs. Speaking of the spot Bitcoin ETFs, they saw $111 billion in volume in March alone. And the halving is coming up in less than 17 days. So although Bitcoin has been on a bit of a slump the last week and a half, with prices hovering around $65,000 to $66,000, like Bryce Harper, who went 0 for 11 to start the season, Bitcoin can explode at any moment, having multiple days of God candles that will melt your face. Stay humble, stack sats, self-custody, and as I always like to say to end the show, happy stacking. If you get value from these shows, please like this video, share it with people who need to hear this information, and subscribe to our YouTube channel to help us teach more people about Bitcoin and why it deserves a place in your portfolio. And with that, we're out.